Neeraj Deewan, Director at Quantum Securities, is now with us. Neeraj, what do you make of this last 4-5 days move that you're seeing? Do you think markets are pricing in, what Fed will do may not be that harsh? Markets are pricing in that emerging markets still look attractive if the dollar is where it is. You think that's what is triggering this flows rally into India?
Yeah, good morning. I think it's a combination of factors. One, of course, I think that money should come into emerging markets and we should get our share. And domestically also, the last couple of weeks events, then we are getting a sense of stability as far as politics is concerned. Though there's a feeling that, you may get the ruling government back again for the next 5 years. So, because of that also, a lot of HNIs and a lot of even institutional investors who are waiting on the sidelines to wait for some clarity or to wait till the election results or we're close to the elections to buy. I think they also now making their comeback into the market. We've seen some interest coming back from HNIs also. So I think that these factors, including the global setup, is helping the equity markets. And though I don't feel that the market will be one side uptrend, there will be volatilities, but I think the market should be constructive on a broader front. I think the market should remain positive if you see the trend from now for the next 2-3 months, please.
Okay, we also saw the rally extending to the broader markets, and is that a trend you expect to see continue, Neeraj, given that once we start to see that conviction return to the markets, we might actually see more participation coming in as well, taking us to those all-time high levels?
Yeah, actually that is what is good about this rally now, is that the broader market is participating. Last time we crossed 11,000, none of us was happy basically. No mutual fund returns were doing well. But now this time you'll see returns improving as far as even mutual funds are concerned or your specific portfolios are concerned, because the broader market is participating. So that is what is required for the rally to sustain. So I can't really take a call on the Nifty or the Sensex levels for the next 3-4 months because there can be volatility. But on a broader market front, I think it should remain constructive and it should be in a positive territory. But one thing, one needs to keep in mind that, though when the markets rally and mid-cap start contributing, we hear a lot of, stocks ideas which will come from all kind of sectors, all kind of stocks. One needs to really stick to the fundamentals there, though there can be short-term euphoria, because this time around market is bouncing after a phase where the mid caps and small caps had corrected to really ridiculous levels. So there will be some small cap, mid caps where fundamentals don't justify, they'll also bounce back. But one needs to still stick to quality and not just buy anything and everything.
What should one look into this market? How should one approach this market? Any stock specific ideas, sector specific ideas that you have?
See, that's why one needs to see, because what has happened is in the last couple of quarters, even in the December quarter, a lot of these mid-cap companies came out with good set of results, but the kind of carnage we saw in January and early February, the stock still corrected irrespective of what results were there. Though if you take you back 1 year in January when the correction started, that time we were after euphoria where everything had really run up a lot. So that sort of correction was required in the market. So we saw the correction, but now when 1 year later, now analysts in the next 1 month will start looking at FY21 numbers also. So a lot of these stocks will become very attractive when you see at FY21 numbers. So one needs to be with the fundamentals. I think sector wise there will be, even cement has seen a comeback. So I feel if I am positive on infrastructure, capital good, so cement is related sector to infrastructure. So I think that is one sector, because when we meet companies, they have a lot of these construction companies, infrastructure companies, the order book is really good. So there was some slowdown which happened last quarter because of whatever liquidity problems, because of NBFC crisis, liquidity crisis. That's why we saw the slowdown in the last quarter. But I think going ahead, these order books have to be executed and slowly liquidity positions improving and executions will pick up there. So capital good, infrastructure, cement, this is one space where I'm positive on. Even in the banking space, you've seen a good comeback, which we've seen a good rally in most of these corporate facing banks also. So I think their PSU banks are still a little behind as far as the rally is concerned. I think they can catch up. They can be a faster moving PSU banks also going ahead. So I can't really time in that it will happen in 1 month, 2 months. But going ahead, I feel corporate-facing PSU banks also have a good, return potential from the current levels.
Let's talk about those banks in a little bit more detail then, Neeraj, because yesterday, of course, we saw the Bank Nifty at a record. We've seen private banks in particular lead the way. I noticed you're bullish on the PSUs as well. Take us through your strategy there, and then we'll come to NBFCs. But the heavyweights, the banks that we're seeing this momentum in, what's driving it, and which ones are you looking at?
See, in the PSU banking space, we've seen, there are these banks like Bank of Baroda, which there was a sentimental negative because of the merger which happened there. So the Bank of Baroda is not getting the valuation it deserves because of the merger with Vijaya Bank and Dena Bank. So I think, and right now it's available at 1 or little less than 110 FY20 adjusted book value. So I think Bank of Baroda, with the strong balance sheet and with the merger after these two banks, I think going ahead now, the negatives are all priced in. So I see a good uptrend in as far as the credit growth is concerned, and I think Bank of Baroda should get a good share of their business, looking at the size of Bank of Baroda. And even in the NBFC space, there was some liquidity problem which happened in a lot of NBFCs, but we've seen that slowly liquidity is improving. So among the segment of NBFCs, there's one gold finance segment. We've seen a decent upside recently in stocks like Muthoot, Manappuram. Then Muthoot is a very good company there, so I think it's still available at 1.7, 1.75 times adjusted book value FY20, and I think there, because the asset liability mismatch problem is not there in gold finance companies, and I think that's why Muthoot has a good potential there with the kind of capital adequacy ratio that they have. So, and even in the private sector banks, though we've seen a good run up happening in some of the private sector banks like ICICI Bank, Axis Bank, and HDFC Twins have been also pretty strong. But if you look at IndusInd Bank, that bank had corrected because of whatever exposure they had declared to ILFS. And so after the correction, the bank has really been consolidating in that 1500, 1550 kind of a band. But now I think that consolidation phase should get over, because going ahead, IndusInd Bank also, if you barring the disclosures as far as ILFS is concerned, the results were pretty good. So the credit growth was pretty good even in IndusInd Bank. So I think there I feel that from current level that can also give you a decent return.